The wake of the OPEC decision, OPEC Plus decision on Monday to stick to its plan to gradually hike output, oil's rally has continued, and natural gas also spiking this morning, up about 1%, more than 16% last week. 16% last week. Joining us now with what he's watching in the sector, Ed Morse, head of global commodities at Citi. Ed, it's not just obviously. Not just natural gas. It's like the whole complex that has surprised people in the broader markets, and there are implications that are far and wide from what's happening, especially if it's not just something that's just short term.
It's not only far and wide, but it's global. It's a coincidence of events to some degree, and it's anticipatory to some degree. And I think we're going to see things kind of softening a bit in the short run, but this is all about what winter demand is. And here we have coal prices and LNG prices and all energy prices, some of them at record historical levels. And it's a month where China's coal use is actually its lowest. So this is really anticipatory of potential winter weather. If we have a warm winter across the planet, we're going to see a big sell-off. But we don't really know, because already, as you said, the implications are high for inflation, and they're high in terms of the cost of doing business, particularly for energy-intensive industries. And here the danger is we're seeing some of them closing off, particularly aluminum and copper-intensive industries.
You add in supply chain, post-pandemic issues, and this at the same time, and inflation, even transitory inflation, is going to be higher than we thought, and maybe not so transitory if what you depending on what happens, as you say, with the winter. So we need to revisit all of our inflationary expectations. The risk is that they're going to be higher than we think.
That certainly is a risk. If the winter is cooler than normal, then this has implications for the winter of 2022. So yes, it has implications not just for whether inflation is going to be short-lived, the 4 to 5% numbers that we're seeing in Europe already because of the energy increase so far this month, maybe nothing compared to what's going to happen. But if Mother Nature behaves, then things can really shift rather dramatically by the spring. We won't know until we get through the winter.
Well, then we need to think about what that means for various components of the equities market. What does it mean for utilities, for example?
Well, it depends on where the utility is and what the regulatory regime is. So utilities are by and large protected. They can pass through, in many cases, whatever their cost of power generation might be, and then the consumer pays the bill, and that's where there's a danger, particularly in Europe and also in China, where people are already taking to the streets. China is acting as it is to try to grab every barrel of oil, every molecule of natural gas, every ton of coal, because they're worried about domestic unrest. Countries in Europe are worried about people going to the streets, particularly in countries like France that have elections coming up in the spring. So there are political ramifications ahead as well.